Happy Tuesday. How you doing out there? Hope you're having a great day. Everybody's happy to be here. I'm happy to be here. This is a quick show that we do called The Closing Beat. We just go over the stock market, all the good, the bad, and the ugly, share some geeky stats with you. Today we're going to review some stats as well because they panned out exactly as they were supposed to, and that's always a good thing. So for those of you that are on the fence about how the markets actually respond to statistical average and things like that, outside of the normal earnings, fear, and greed, which we'll also cover today, well, hopefully you're on the fence now. We'll share some of that data with you. We're also playing a game called Guess the Dow. Our winner, Robert H. from last week, gift card is on the way. And yeah, feel free to play. Go to jazzwealth.com/guess the Dow. Take your guess. If you're the closest without going over, we'll send you a $100 gift card. And if you're one of our customers, we'll credit your account $100. So there you go. Hope you'll play. Also, Thursday this week, our class, we do a class every week for customers, is just a way to do more, right? Every other advisor, they just sort of take your money, they invest it, and then they say, stay the course, do everything. I like people to know what's going on. So I do classes every Thursday night, hoping to expand on that, where we teach you something new. We try to go over things that are different. Maybe it doesn't apply to you, but it's just something more that you can learn about the markets, your investments, or generally how to keep your dough straight, as the sweater says. Anyways, this Thursday's class will be on covered calls, so you can head on into the dojo. This is the dojo here. All of our videos, our private previous classes, are all listed in here. You can kind of scroll through. You can search for topics. You can go through support topics, basic topics, advanced topics. Actually, we call the advanced topics geeky. So if you decide you want to sort, you can go through the wine and wealth classes, support, basic classes, or geeky if you're feeling like you want to go through some really interesting studies. Well, anyways, Thursday, the class will pop up right here. You can come and join us. If you're one of our customers there, you'll be able to see everything live. You'll be able to interact with everybody else if you'd like to. And if you can't make it, of course, you can watch the replay. Most customers actually just watch the replay, but I do it live because selfishly, it's a lot easier to do it that way than to record something and just sit back and wait for people to ask questions. So that's that one. All right, let's get into the markets today because we had a really interesting day, but really, was it all that odd? Wasn't it sort of predictable? If you saw yesterday's closing beat, we went over this ahead of time. I always like to say, I want to tell you ahead of time instead of I told you so, right? There's a lot of people out there that are like, they'll say a little bit, and then when the market kind of does something like they want it to, they'll be like, aha, I knew it. I'd rather share the stats with you ahead of time so that when it happens, you kind of already expect it, right? So I like to cover things like that. Anyways, you got the Dow higher by 187 points today, 32 on the S&P, 130 on the NASDAQ. If you go over to the markets today, here you go, almost a complete reversal from yesterday, big down day. One of the worst days in, 3 months that we've seen for the markets. Today we basically recovered it here out of nowhere, just coming back above the 20-period moving average, all looking good in the S&P, and a little bit higher after hours because of Apple's earnings, which we'll cover in a second. I hope. I'll try to dig through that with you. The NASDAQ also higher on the day, really strong today, and after hours adding just a little bit more to the pie, but basically recovering all of yesterday between the intraday performance and the after hours thanks to Apple. And the Dow also higher on the day, and after hours going to be a little bit higher thanks to Apple. This did get held back a little bit because we had earnings from Pfizer, 3M. They weren't very good, and so they held back the Dow overall, but we can cover that as well. As far as the S&P 500, recovering, what happened yesterday? Yesterday was a move of over 1% or more. If you happen to be a part of us yesterday, here's what we did. We put this on the charts. We basically said, what is the S&P's average intraday performance following a move of 1% or more to the downside? We looked at the entire history and said, oh no, when the market gaps down, has a bad day, 1% or more, it doesn't tend to recover during the day. However, we went a step further and said, you know what? That next day, if the markets gap down on a Monday, you just have to wait a day. Statistically, it recovers about 0.87% the next day, and wouldn't you know it, we put up 1.01% on the board today, so we got just a little bit better than the average. But if you're interested in that sort of the breakdown of all of this, go check out our class yesterday. I hope you will. All right, tomorrow we have the Fed Day. That'll be the focus. You've, of course, got a ton of earnings out there, right? So there'll be earnings focus as well. We'll cover all the stocks reporting earnings a little bit later. But you've got Fed Day. So the Fed Day is the sort of big focus tomorrow. 2 o'clock Eastern time, the Fed decision comes out, whether they're going to cut rates, raise rates. I'll cover the stats on that in just a little bit here so that you guys are prepared for that as well. All right, let's do it. Apple earnings out after the close here. Let's see. So Apple had a good day today, by the way. Good day, reversing most of yesterday, almost all of it by the time it got to the close there. And this is the first full quarter of their iPhone 11 sales. Full quarter. I mean, there's a little bit of bleed over from the last quarter, but first full quarter there. After hours here, we've got earnings that beat expectations. I'm just digging through this with you. I don't have anything magical planned. Earnings beat expectations. Looks really good. Revenue better than expected. Actually, revenue up 9%. Looks pretty good there. Let's go to services. If we could dig through where that's at while I'm looking. The Apple is up just over almost 2%. On the after hours trading here. Services came in higher by 17%. That's a little bit light. Analysts were expecting right around 19%, if I remember right. Could have been 18, but either way, I recognize that as being a little bit light. The company guides higher as well, which is cool because there was a lot of concern over China and the slowdown over the previous quarters there. So they guided higher as well, actually decently higher. All in all, this generally on the surface looks like a really good earnings report. Let's find gross margins. Yeah, that's always something people look at. Gross margins upticks as well. Looks good there. And cash on hand, $207 billion. That's a small uptick, just a little bit. It's up just, that's about 0.5% higher, 0.5, 0.6% higher over the previous quarter. $207 billion, just chilling in the bank, right? If you've got a company to sell Apple, go give them a call. They got the cash. Call them or Warren Buffett. Well, at first glance here, great earnings report here from Apple. Obviously, the conference call could change things, but the entire beat, if you look at their earnings beat, basically the entire beat came from iPhone sales. That's good. It's the largest part of their business and everything. But services a little bit light there. If there's anything negative to say, it could be services. But for the moment, nobody cares. Stock's up just over 2% as we're talking here. So good job, Apple. Looks like a good earnings report. That stock at the moment is going to open at new highs tomorrow. So we'll see. Currently, Apple trading at 324.50. See how that puts it just above all-time highs there for Apple. So if you own some shares of Apple, good job. It looks good, man. That's a good report there. Other earnings before we get to the sector breakdown today are going to be Starbucks. Basically closed the day flat. Remember, and speaking of closing, they closed about half their stores in China. They're not real big over there, right? So it's not like life-shattering. They beat on earnings, small miss on revenue, looks like. Sales were up 7% overall. I think we were looking for a little better than that. They guided in line even with China. Looks like they have nothing but positive things to say about China. They're not really factoring in a whole lot of issue there. I would say that's a bit hopeful, guys. Looks like they're just kind of throwing it out there for this quarter. The stock's higher by, it's lower at the moment by 1%. I think people were focused on that. They were looking for guidance to just come out and be honest with us and just kind of give us a little bit of a hit to earnings per share. Didn't get it there. But that stock's just a touch lower here after hours, 1%. Not a big deal. That's going to keep it still right around the 50-day moving average. A couple others that I noticed here after hours. You got Xilinx trading lower substantially, over 8%. That's in the semiconductor space. Advanced Micro Devices, AMD, is lower as well. Those two are going to make up about 10% of the sector. Yeah, they're going to make up about 10% of the sector. Those are going to be earnings-related stocks. You got AMD down about 4.5% after hours here. It was only up 2.5% on the day. That's going to put it negative. Xilinx really stands out in my opinion. Let me go back here and see because Xilinx was down about 8%. These are semiconductor stocks, by the way. Remember, you need the semiconductors to keep this market going. The Apple can't do all the work now. So let's see where Xilinx is. Oh, it's still down about 8% after hour, trading at about $90. 90.50. Let's give it a little credit there. 90.50. That's going to put it around the lows. So a big move lower for Xilinx after hours. If you care, that is that and AMD makes up about 10% of the sector. Microchip or Maxim is helping out a little bit. That's a touch higher after hours. They got a bit of a mixed bag there overall for semiconductors. Let's dive in there today. So for our sector breakdown, you got semiconductors higher by 2.5% today. I'm going to suggest a little weakness there tomorrow based on some of these earnings, but like I said, I'm just digging through what I can see here. Throughout the day, you have semiconductors as a whole is pretty much a broad-based rally. You can look at all the big guys out there. Taiwan Semiconductors is the biggest position in this ETF here. Intel higher as well. A little bit of a recovery from yesterday. Actually recovers all of yesterday. Nope, almost. Nope, didn't recover all of it. But basically good. I think, semiconductors as a whole, pretty broad rally there. We'll move on to the tech stocks. Obviously, they were higher today and look to be higher tomorrow with Apple reporting their earnings. You got Microsoft headed higher as well, if you happen to own that. Visa higher as well. And Intel, we already talked about that. Those four making up about 40% of the overall tech sector. Let's go over to oil. We got a little bounce in oil here today, and even after hours, it's electronic session at the moment. But yeah, basically a higher day of 1.5% for oil. Very extended to the downside here. Just a lot of bottom picking going on in oil. We covered this yesterday for you as well. If we look at the financials, not a bad day. Good little recovery for financials, keeping in line with the market. JP Morgan stood out as one of the better ones, making it all the way back to the 50-day moving average there. And American Express still looking really strong there. That gap down from yesterday, some of it getting recovered, 1.33% there. Silver, you got a little bit lower on the day, back to the 50-day moving average. Lost 3.33% if you care. That's down to 1-month lows, basically erasing everything for the year and then some. Gold, we'll use the ETF GLD if you want to take a look. Just people deciding to take a little profit in the short term, a little bit of that coronavirus scare sort of dwindling away, although the outbreak is not dwindling away. It actually got a little bit worse. But overall, a little bit of pullback in gold. You got consumer discretionary stocks. Here's that trend line we talked about yesterday. A little bit of a bounce off of that. That's just the algorithms and people looking at that saying, okay, I'll take a little risk off of some support. Got a little discount in the short term. Industrials, that was hovering around the 50-day, still stuck there. It held up because of United Technologies. They had earnings today, and that did well. And then you had Lockheed Martin as well, hitting new 52-week highs. That's going to be earnings related. General Electric did well, by the way, off the 50-day. That was a good day, 2.5%, considering they have earnings tomorrow. So they're going to report earnings, a stock where people are willing to take a little bit of a risk into earnings. That's interesting. 3M down about 6% on the day. That's the one that held the Dow back the most. That 3M lost the 6%, was the worst in this sector, and it was the worst in the Dow. Just a bad day, earnings related. They missed on earnings by 15 cents, and they lowered guidance going forward. They're going to cut 1,500 jobs. I think that's in the scroller below. So that hurting the sector a little bit. Home builders did well today, another 2% for the day. You got Dr. Horton pushing highs, new 52-week highs. By the way, I know it's not Dr. Horton. I have nicknames for all these stocks, and sometimes I just say them from my previous life. So if I say something, I know it's not Dr. Horton. It looks like it's Dr. Horton. Look at the logo. So anyways, they did well. Pulte Homes, you got earnings there. Poked up to new highs, almost 6% on that one as well. In the home builder space, remember, these are not only home builders, these are companies that also support them as well. Home Depot and the carpet companies, tile companies, things like that. So Whirlpool hit highs today, also up about 6% on the day. Beat on earnings and revenue. Digging through a little bit further, Tempur Sealy, TPX is the symbol there, hit new 52-week highs, 4.5% on the day. They had a comment from a CEO that said, we think that 2020 is going to be a good year for betting, just for people sleeping. It's just going to be a great year, so the stock was higher there as well. We mentioned Pulte Homes as well, and a couple others played along. Lennar hit new 52-week highs. Some of the home builders did well, and Home Depot did well also, up 1%. All right, what else? Oh, if you like Harley Davidson, you probably didn't like it today. Down 3%, well up off of its lows for the day. Gapped lower about 6% on the day, just a little over 6%. They missed on earnings and weaker revenues overall, weaker guidance and everything. Just wasn't good for them. Bit of a waterfall drop there for Harley Davidson. And one other... Juniper, where'd that one land? Yeah, that one gapped lower as well. They missed on earnings only by a penny, but they lowered guidance going forward, and so you got a bad day for Juniper if you're happen to be paying attention in there. 61.3% of the S&P 500 is above the 50-day moving average. Have you noticed a little more volatility in that number? So we don't just track the number for the sake of me saying words. We like to track the performance of stocks above their 50-day moving average and when they cross above and below just to see how things are going. That number's been really volatile, all the way as high as, we had 75% last week. We had 56% to start this week. And so a lot more volatility in that number. That's all earnings related. But the question is, does the volatility continue? A lot of people think that this market volatility here is not only because of that virus, it's more about this new phase of the market that we're heading into, election season and everything, earnings, of course. And so concern there that volatility is actually going to pick up. We'll see. We'll track that number and see how volatile overall the markets are. There are better ways to track volatility, but of course, that's a fun way for us to do it while we're here with you. 25 new 52-week highs today. Well, a lot of them are going to be the home builders. I don't need to go through them again. You saw some of the home builders do well. You had 3 REITs in the mix. Crown Castle hitting 52-week highs, looking good. Duke Realty, DRE is the ticker symbol there if you want to look. That one also hit 52-week highs. And Boston Property, I always get this ticker wrong, BXP, there it is. Did finish off the highs of the day, and that's a volatile stock, by the way. Can you tell the difference? Like if you look at a chart, you see the volatility day by day, how it's just kind of wild. There's not really any time where there's really tight, small days. Now go compare that to something like Crown Castle. See how the ranges are more consistent, meaning when it marks a high, that tends to be the high, and then it moves from there. If it marks a low, it tends to mark a low. There's not a lot of tails inside of here, whereas if you look at Boston Properties, lots of tails everywhere. See how choppy and sloppy that is? If you don't like using charts, you at least have to be able to pick that out and say, you know what? I'll tell you what, if I'm going to trade a home building stock like Toll Brothers, I know it's going to be a little bit more volatile than if I trade the other home builder like Pulte Homes. Got to be able to compare the two there before you enter the position. That'll help kind of settle the stomach a little bit. Side topic. All right, Garmin. There you go. Garmin hitting 52-week highs as well. Very strong day for Garmin overall. And NASDAQ was added to the list today of the other stocks that are doing well, like the CME Group, CBOE, things like that, Intercontinental Exchange, all the exchanges that have been benefiting or traders are assuming they're going to benefit from this recent volatility. NASDAQ added to the list as well. And so we covered that yesterday. There were 5 new lows on the day. One of them was a REIT. They didn't all make new highs today. Simon Property Group, these guys have been really struggling here. That's a fresh breakdown. Stock lost another 1% on the day today. Alcoa is really the only other one that stands out. Just a bit of a falling knife scenario. Not a waterfall, bit of a falling knife scenario there at the moment. And lastly, for the list, you remember Delphi? We kept pointing out new 52-week low, new 52-week low, new 52-week low. Well, Delphi is actually getting bought out today. See the gap up today? Big move for Delphi. Borg Warner is going to buy the stock, so that's why this stock is lower on the day. And Delphi added 60% on the day. So not going to make any new lows anytime soon. If you happen to like picking on new lows, I don't suggest that, but wow, that paid off there in the short term. So there you have it. All right. That's about it for the stocks there. Let's cover the Fed meeting tomorrow. Tomorrow is the Fed decision day. They'll announce whether they're going to cut rates, raise rates, or leave them the same. There is an 87.3% chance that there will be no change. So basically everyone is expecting and betting on there being no change in the federal funds rate tomorrow. There is currently a 12.7% chance of a rate hike. So very few people believe that they'll raise rates. I actually think they'll just leave rates the same. I actually think that this Fed announcement will be the most boring Fed announcement looking back a year and looking forward a year. I think it's just going to be a real snoozer. There's a chance of something happening, but at the moment, everybody's leaning towards no change. Actually, if you look through the Fed, the odds there, the odds don't pick up for another rate cut until September. Currently, people are betting that if there's going to be a rate cut, it'll be in September. The odds are 38.1% at the moment. That's a fluid number that does change. So we'll see. What you should probably know is if, and I've covered this so many times in the past, just ingrained in my memory, if the Fed does not change rates, the average S&P return for the day that the Fed makes their decision is 0.27%. Right? So the market tends to lean a little bit positive, but not by much, 0.27%. And so we'll see what happens tomorrow. It comes out at 2 o'clock Eastern time, if you're interested in following up on that. What else do we have? Let's take a look here. Stocks reporting earnings going forward there. As we're talking, Apple's still up 2% after hours. Tomorrow you got earnings from Anthem, Boeing, General Dynamics, General Electric, MasterCard, McDonald's. McDonald's, we're looking for $1.96 a share. That's seen as ambitious at the moment. AT&T is looking for 88 cents, about in line there. Facebook looking for $2.53 a share. Lam Research to report in the semiconductor space there. Las Vegas Sands, Microsoft, PayPal, and of course, I know y'all are waiting for it, Tesla. Tesla to report tomorrow. Dividends, you got Ford paying out 15 cents ex-dividend tomorrow. And Paycom, remember, is going to replace WellCare it should be doing it right now, actually, in the S&P 500. So a little adjustment for you index fund traders out there. All right, if I can do it, I'll try to answer your questions, and we will take it from there. Hopefully I didn't say too much and didn't say it too fast. Let's see, what to do with so much cash while waiting for a good buy. What to do, right? I don't know. Well, Warren Buffett's got a ton of cash. Obviously, Apple's got a ton of cash. What do you do with that cash while you're waiting? What's Warren Buffett do? What's he doing? Is he just sitting in there? Is he just in the bank not making any money? What do you think? You always try to keep some cash for a good discount. I don't blame you. I don't blame you. You like a discount there. For the active side of things, I don't blame you. For the long-term investing, you are proven wrong in almost every single case in every study that's out there. But if you're an active trader, and I know some of you are, keeping a little cash on the sidelines for drops like that happened over the last couple of days, can't blame you at all. There were a lot of good names that actually sold off in kind of a waterfall way. Las Vegas Sands, Dr. Horton, or not Dr. Horton, Royal Caribbean, one of them. Energy, XLE was another one. So if you're saying, well, I like to keep cash for things like that and take my shot at playing waterfall drops, that's cool. How do you create the stats for the SPY like you did the one yesterday, predicting the bounce to use Excel? You use Excel to download the data. We actually just buy all the data, right? So some of it's free. You can probably get it, but there's a difference between wanting data as a retail viewer and a professional. Unfortunately, for some reason, if you are labeled a professional, they charge you money for it. Horrible. Just a horrible junk fee. But we just pull the data. Anytime we think of something, pull the data, run a study, and see what we can do from there. Yeah. You saw your ETFs drop like hell yesterday, but recovered some today. Would you be wrong to sell, take your gains, and just hold for another drop? That depends on the strategy there. If you're an active trader and you bought some of that dip, or you see the bounce today and you're like, oh, well, I'd take a little profit and move on. The question is, what would you do with the money, right? So we have this really weird point in the market now where everything's sort of jumbled up. We had a big drop, all of a sudden we rallied. You got people going, wait a minute, are we going to go sideways from here? Are we just going to recover all of this and pretend it never happened? Or is this sort of a dead cat bounce in the short term? Unless you have something to do with the money, I kind of feel like it's a wait and see sort of thing, right? Well, if there's something sticks out to you want to participate in, then we'll see. By the way, the 3-year, 10-year inverted. First time in 3 months today. It was brief. It was very brief. You had to be staring at it. If you missed it, you missed it. It was gone like that, but it did temporarily invert. Is that like a hint? What's going on? Are we going to start that conversation again? What's the difference between a waterfall drop and a falling knife? Waterfall drop does just that. As it falls, the range of each day gets larger and larger, right? So you've got more and more pressure to the downside. A falling knife type drop is one of those days where every day it just seems to be down about the same amount, never anybody really panicking or anything. It's just every day it bleeds a little bit lower. Big difference there. I love it. Well, the FOMC, well, so tomorrow what you'll see is a little earnings adjustment there, right? Because a lot of companies reported earnings. You'll have a lot of earnings in the morning, so the Dow may be a little more volatile because of Boeing. You got Tesla in the mix. Oh, well, no, in the morning, you've got MasterCard, McDonald's, you got Boeing, General Dynamics, General Electric, of course, AT&T. So you'll see a little bit of adjusting there, and then snooze fest, right? So morning volatility, quiet through lunch, everybody waits for the Fed. It's typical pattern. That is typically what happens there. That's a good way to say it there. I love it. What's your prediction for Tesla? Beat and move up or no? Thinking about gambling some on it. I wouldn't pretend to be able to guess what's happening there. I would think that if whatever the result is, if the stock starts higher, especially if it gaps to new highs, I would fully expect some very angry short sellers to try and take another position to try to push it lower. Remember, there's a lot of short sellers that got burned and had to cover. They don't just run away forever. They look for another opportunity to come back and get their money back, especially the big hedge funds out there. So I would think similar to kind of Apple, right? Apple's done really well. If it gaps higher and really does gap higher tomorrow, you'd expect to see people trying to either take profits or start new short positions. I would think that would happen on Tesla. I'm kind of excited to see. But we'll see. I love it. Yeah, that's true. Waterfall drops attract more bottom picking because it's seen as more pressure, more fear to the downside and more of a washout, right? So people that wanted to sell their positions are dropping like flies, whereas people that see a stock slowly declining, imagine the emotion there. Your stock loses 0.2% one day, you're like, I can hang in there. 0.2 the next day, no big deal. 0.2 the next day, not cool. 0.2 the next day, you can kind of withstand that. But if your stock loses 0.2, 0.5, 1%, 1.5%, 2%, you start seeing that, you're going to react emotionally, and most people tend to do that. Yep. You're right, 11% plus or minus on Tesla. So the expected move, where'd we go? I think I lost my connection here. Expected move was $53 plus or minus. So currently traders are planning where the stock is currently at, that it will be positive $53 or negative $53. That is the range that everybody's working with right now. That's a large range, right? That's almost 10%, which we'll see what happens. I think if you see a $53 move, well, if you do see a $53 move, that does put it to new highs. So we'll see. There is a lot of pressure on that man for tomorrow's report, and he already knows what the results are anyways. Okay. We will wrap it up there. I think I covered everything. I did. I appreciate you watching. I hope you have a great rest of your day. Remember, if you have any questions about us or how we work here, feel free to check us out online. Send us an email, schedule a call, whatever you like, and we'll take it from there. Enjoy your day. We'll see you again tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.